Okay, and Patrick, if you would go ahead and get started. Thanks,
All
everyone.
right. Thanks, Lori. Everybody can hear me okay? Okay. Well, today we're covering the student loan landscape, which I thought was important to cover because in the last about 6 to 12 months, there have been like a number of changes that were made to how the Department of Education is handling things, and it's really caused a lot of people to have questions about everything. And whatever area of practice you have, you're probably going to encounter someone who has student loans who may run into these things. So it's definitely worth reviewing all of those changes. We have about 40 million student loan borrowers nationwide with 1.5 trillion in student loan debt. So this is a pretty substantial problem. And there's so many different things that we can do with those loans now, especially with all the changes that have been made. So when we talk about the impact here, what President Biden has done alone without Congress through the Department of Education is just staggering. I don't think many people realize the extent of the impact just on these, the way that he reorganized the Department of Education or through executive order, or just simply how these forgiveness applications have been processed, but it's really significant. Some of the recent administrative actions are resulting in automatic debt cancellation for about 40,000 borrowers. More than 3.6 million borrowers are getting additional credit, about 3 years of additional credit under income-driven repayment forgiveness. There's other changes regarding how those are going to be calculated. And then there was also a change in how a lot of this forgiveness is taxed. So while some debt forgiveness was not taxed under the old laws, student loans, at least some student loans, were being taxed when they were forgiven. That was changed with the American Rescue Plan. So now, at least through 2026, we don't know what's going to happen after that, but through 2026, the loans are not taxed, or the forgiveness on those loans is not taxed. So we're talking about different types of student loan debt. We basically have two kinds. So we have federal loans and we have private loans. The federal loans right now are all directly originating from the Department of Education. They use a servicer such as Mohila or Great Lakes, and credit is not a factor. There were federal loans in the past that existed that were written or lent by a bank and guaranteed by the federal government. For the most part, those have gone away. There are some people who still are hanging out with some of those older loans, but they're no longer generating new ones. Private loans, on the other hand, are originating through a bank or a credit union. They're not insured or guaranteed by the Department of Education, and they do generally have credit worthiness associated with them. And the type of debt matters because federal loans generally have a lot of neat things that come along with them. So they can be subsidized, which means the interest rate is lower than the market rate. We have income-driven repayment plans. Sometimes we're able to get more money out of a federal loan because it doesn't have that credit worthiness associated with it. But also, there are many, many types of loan forgiveness that are not available with private loans. It's a lot of what we're talking about today. So that's why the type of loan matters. Because when we're talking about the changes in private loans over the last 6 to 12 months, not a whole lot. They're still governed under standard contract law. We still have standard contract offenses. Not a whole lot going on here in terms of development. However, you may have heard about this lawsuit. So this was actually led by Josh Shapiro. Other states joined in. It ended up being 39 state attorneys general, but Josh Shapiro was the lead. Ended up settling with Navient for $1.85 billion. That included two different things. It included what they call a restitution payment of $260 for anyone who had a federal loan serviced by Navient who was steered into forbearance. I think the $260 is obviously nothing, but it is part of the settlement. The bigger portion of that was these subprime private loans that were forgiven. There were very specific qualifications, but we have started getting notice that a lot of my clients are getting those charged off now. So we are getting those letters that is coming through. It's a small subset of people, but for those people that did qualify, it was a big help. So that's really the only big update in the private loan world. Everything else today is going to be on the federal side, and we got some big sweeping changes here. So first, going over changes to the forgiveness programs. Generally, and if you've attended any of my primers on these in the past, you've heard me talk about public service loan forgiveness or teacher loan forgiveness. These are two of the more well-used programs because we have under public service loan forgiveness, basically a 10-year forgiveness period. If you have 120 qualifying payments and you work for a nonprofit, government employer or government employer, you can get forgiveness. Just thinking about the people that may be on this call today affected by this, you're talking about any governmental lawyer, which includes PDs, ADAs, clerks, North Penn because they're 501c3. So any one of those organizations, you may be on this call and you may qualify for this if you don't already. Those were the standard programs. Those had already existed. The changes, though, were major. I alluded earlier to these older types of loans, which were written by banks. So like prior to 2010, if you went to school prior to that time period, you may have gotten a loan directly from a bank. Wells Fargo wrote them, but a lot of private banks did. Chase. Those loans were guaranteed by the federal government. So if you didn't pay, the bank would just turn over your loan to the federal government. The federal government would pay the bank. It worked very similar to the way that we handled the PPP loans last year, 2 years ago. It was just merely a guarantee. Some people still have those loans. So the issue is those loans never qualified for these programs. So people who got these loans years and years and years ago were faithfully paying on their income-based repayment plans, thinking that they were headed towards forgiveness when they were not. The Public Service Loan Forgiveness Program originated in 2007. So you figure by 2017, people were knocking on the door ready with their 10 years payments. You may have seen the articles, you may have heard that 99.9% of people were being denied for this program. Well, the reason was they all had FFEL loans. They all had these older loans that never qualified. So how fair is that? You get this loan. No one tells you you need to consolidate into a direct loan. No one tells you you have the wrong type of loan. You pay for 10 years only to find out that you don't qualify for the entire program that you intended to do. Particularly troubling if you intended to work for public service for 10 years and then move into private practice. So Joe Biden says, well, this is a problem. These people were essentially lied to. I know what to do, I'll fix it. So October 6th, 2021, he issues an executive order changing the way that we handle the public service loan forgiveness program and creates this huge opportunity for millions of people. What we're allowed to do essentially is consolidate loans that were originally FFEL loans and turn them into direct loans, which would now allow us to retroactively count older payments. And I'm saying this very matter of fact, but this is like, I can't tell you how big this was. Like you find out that you're denied, you worked 10 years under the wrong loan. If you came to me in September of 2021, I'm telling you, you're out of luck. I'm telling you, I'm sorry you wasted 10 years of your life. You come to me on October 7th, I can fix this for you. This is huge. So it's a complete change to the program. So essentially, the way that this works is you still can't get forgiveness under FFEL. You have an older loan, an FFEL loan, federal family education loan, you still cannot get forgiveness under this program. However, What you can do until October of this year, there is a deadline. Until October of this year, you can consolidate your FFEL loan into a direct loan, and then we're going to retroactively count the payments you made under FFEL. So it's a new loan, direct loan, but we're going to go back and look at your loan history, and we're going to see if you qualify. This is major. What I encourage people to do, particularly if you were on this track, or you thought you were on this track, is just make sure you have a direct loan. Because if you call me in November and you say, I really swear I thought I had a direct loan, I can't promise you I'm going to be able to fix it. But I could fix it right now, up through October. So you should definitely double check that. Other things that we've done here. So there were periods of time where you would call your servicer and you would say, you know, I can't really afford my payment right now. Well, under income-based repayment, if you couldn't afford your payment, maybe they should have done a recalculation. Maybe your payment should have been $0. $0 payments under income-driven repayment or under the PSLF program count towards your ultimate forgiveness. But the servicers were not telling people that. If you called and told them that you couldn't afford the payment, the easiest answer for them was to drop you into a forbearance program for a year. It was super easy for them. They clicked a button, moved on, and they got their next call. It wasn't good, though, for you, because forbearance periods did not count towards income-driven payment forgiveness or PSLF. So Biden says again, hold on a second, totally unfair. The servicers, it didn't go through any of this with the people. They didn't know what they were doing. They dropped them into this program when they shouldn't have. So what we've done is we're going back and we're going to retroactively count periods of forbearance towards forgiveness. That's all retroactive. So this fall, they're going to start making those automatic recalculations. Nothing required on your end. You don't have to consolidate, although for some people that does make sense, especially if you're doing PSLF, you probably do. But this automatic recalc is going to happen under both programs. So your months spent in deferment will count towards forgiveness with a couple caveats. So we're still not counting in-school deferment. That still doesn't count. That never counted, does not count now. But forbearance, if you called and said, I cannot afford to pay, that will count. This does not change the requirement for qualifying employment. So if you're shooting for PSLF, the public service loan forgiveness, you must still work for a government or nonprofit or otherwise qualifying employer. That still remains true, even if you were in forbearance at the time. So you could see, I just summed up here on this slide what is different. So from this October 6, 2021 executive order, what were the old requirements under PSLF? What are the new requirements, or the waiver program, as we call it, up through October 31st of 2022. Very big stuff. Please remember to consolidate your loan if you need to. Okay, income-driven repayment. So the PSLF is probably the biggest thing. Most people have not hit the numbers that you would need for income-driven repayment yet. Income-driven repayment requires 20 or 25 years of payment to be forgiven. So we haven't really seen this yet. However, we had similar problems with the income-driven repayment plan, even though they haven't materialized in the same way that the public service loan forgiveness did. So the general, before I go over those changes, the general requirements of the income-driven repayment, you get on a payment plan, which is generally a percentage of your discretionary income. There are formulas for this. There are different formulas depending on which one's better for you. You pay what you can afford, or at least what the Department of Education says you're supposed to be able to afford. The problem with these loans is that they are potentially negatively amortizing So if you run the risk that the interest is accruing faster than you are paying, which means your loans go in the opposite direction. You're never going down, you're only going up. And at the end of 20 or 25 years, we would forgive those loans. Biggest thing that we did with those was there was COVID pause. So if you had student loans that were direct loans, you should not be paying them. Probably have not been paying them for the last 2 years. That pause has been extended currently through August 31st. There is talk of whether or not that pause will continue. We don't really know at this point what Biden is going to do. From a political standpoint, it is our suspicion that he is going to, at a minimum, extend it through the midterms. I feel it would be disastrous for him to restart payments in September. So my expectation would be that this will at least go through the new year, but I have no news on that. So as of right now, it is August 31st, with payments to resume shortly thereafter. There is going to be a new certification and new recalculation, because I get that question all the time as well. You probably haven't certified your income in the last 2 years because you haven't been making payments. There is going to be a procedure for certifying your income now so that your new payments will reflect your current income situation and you can get on a new payment plan. I'll also make a note here. You probably had already figured this out. If you have FFEL loans, you know by now, those were not paused. So here again, it's just not as good. The FFEL loans were not as good as the direct loans. They never were. You did retain the possibility to consolidate those earlier on. There was reasons that maybe we wouldn't have done that prior to that October ruling or October executive order, but now there's questions as to whether or not you should consider consolidating those FFEL loans. The income-driven repayment and PSLF program account adjustment. So this was another big one. This one was recent. So that last order we talked about was from October. This one was from April of this year. So with this one, we're talking mostly about income-driven. So while it does apply to PSLF, I think the bigger change is with the income-driven repayment plan. We're doing a one-time revision of all account histories to correct inaccuracies and fix the counting structure of the IDR program moving forward. So a lot of what this is going to entail is going to be, there were some things like underpayments, partial payments, failure to recertify. There's a bunch of things that happen to people over these years that are going to now go back retroactively and be corrected to count as a payment towards your income-driven forgiveness. And then procedures are being instituted moving forward so that these problems don't happen again. So essentially, here's what we're looking at. For both direct loans and the FFEL loans, we're doing a one-time revision of qualifying payments. Those will include any months which you had in repayment status, regardless of whether a payment was made, the loan type or repayment plan. So think about what that includes. Those were missed payments, underpayments, late payments. Those are all going to qualify now if you were in the right plan. The loan type. So I've already complained about FFEL several times today. Some people accidentally or unknowingly consolidated their loans at some period between 2010 and today, not realizing that at the time it had restarted the clock on their income-driven repayment forgiveness. This one-time revision is going to go back and count all the time that you had under the FFEL program or under the FFEL loan. So again, it's a one-time correction. We'll go back and we'll make those corrections. The forbearance, so we talked about how forbearance was being done with PSLF, that is being adjusted for IDR as well. So anytime you had a 12-month forbearance, that is going to be counted toward your IDR. Months spent in deferment, which is different than forbearance, will be counted, with the exception of in school deferment, which is not going to count. And any time in repayment prior to consolidation. So that's, again, the correction of that FFEL problem. Or there may be an instance in which you may have consolidated a direct loan with another direct loan, not realizing that that restarted your clock as well. So all of that's going to be fixed. As part of this one-time revision, if you have accumulated 20 or 25 years of payments, once this revision is done, you will get automatic forgiveness. You will literally just get a letter in the mail that says your loans are gone. No action required. All going to happen behind the scenes, whether or not you do anything. If you have an FFEL loan, you only get this if you consolidate by January 1st, 2023. So I cannot emphasize enough the importance of reviewing your loans to determine if you are FFEL or direct, because here's another program that you theoretically can miss out on. But if you think about it logically, though, this stuff really makes sense. Like FFEL loans are held by like Wells Fargo and Chase. They're not giving you this stuff. The direct loans are held by the federal government, so they can do whatever they want. So the goal is when you consolidate, the federal government's going to pay off your FFEL loan. They're going to pay back Wells Fargo. They're going to pay back Chase. And now you owe the federal government money, which is kind of like fake money anyway. So they could do whatever they want with it. So that's why they want you to consolidate these loans. So here's your chance. You don't have to, but if you don't do it by January 1st, you're not going to be part of this one-time revision. If, and this is, this one's huge too, and I can't emphasize how big this is. People have asked me, well, I've been paying for 30 years or whatever it may be. If at the end of this whole thing, we find out that you overpaid, you're getting your money back. They are going to issue refunds for the overpayment after the recalc is performed. It's just absolutely incredible. In addition to that one-time fix, so we're going to fix everything once, but then also we're going to fix procedures moving forward. So that's what this slide pertains to. We don't want those things to happen again. So we're fixing the procedures, we're fixing the practices, we're fixing the rules. Some of this stuff is going to go through formal rulemaking. I don't know how many of you do administrative law. I do a lot of it. It's extraordinarily boring. But when you do an admin law, there are the way you have to pass new rules is you have to go through this formal process where the department has to propose a rule. It has to be put forth for comment. Then everybody gets to comment on those. Then they go back to the department for comments to the comments. And only after all of that do they do the final rulemaking and adjust the rules. Some of these procedures are going to have to go through formal rulemaking. But for now, this is what we're looking at. We're going to modernize the systems so that the Department of Education is going to automatically track your payment counts. This is important because they don't currently make your payment counts. The servicers do. There's no uniform procedure. You cannot log on to studentaid.gov, look at your account, and find out how many payments you made. You can't do it. It's not there. It'll tell you your loan balance, but it's not going to give you account history. They can't. The servicer can, but what happens if your servicer changes? So all of these things are problems, which we're hopefully trying to centralize that with the Department of Education, which should fix all of that. But that's part of what Biden's doing here on this move. So we're undertaking an effort to display IDR payment counts on studentaid.gov. That's incredible. Again, this is like huge stuff. I know this is boring and everyone's like, oh yeah, I know I'm here for my credit, but this is like incredible. If you have student loans and maybe you were with FedLoan or something like that, and you're saying, well, this is no big deal. I used to log on to FedLoan and they had my account. Yeah, I know that's kind of my point. Like FedLoan was your servicer. They had your account, but if FedLoan closed, like they did, if you had FedLoan, you know what I'm talking about. Your loans are being transferred now to Mohila. Now we have to transfer all of your payment data from FedLoan to Mohila. Under this new system, it's all centrally tracked with the Department of Ed, so that regardless of your servicer, Department of Ed always knows whether or not you made a payment and whether or not it counted towards your IDR, so that you know whether or not this stuff is counting. We're never going to be surprised again about whether or not you're on track for this income-driven repayment. So they're working on regulations to simplify the counting and the deferment and forbearances. And those, I think, are going to go through rulemaking. So this is kind of where, because this is a little bit more complex, how deferments and forbearances will be counted moving forward is probably going to go through formal rulemaking. Okay, changes to administrative discharges. So these already existed. There were changes made to these, but just to go over the administrative discharges that have existed. Death discharge, this is one of my favorites. When you die, you no longer owe your loan. Of course you don't, but it doesn't pass on to your estate. So in case you were wondering, death discharge, you're out of it. Your estate's not on the hook. We get the death discharge. Closed school discharge. This is a very small sector of people. People think that if their school closed, they automatically get the closed school discharge. It's very small. There's very clear rules for this. It has to be while you're attending the school or with 120 days, and there's rules about whether or not your credits transfer. Most people don't qualify for this, although it does exist. The borrower defense to repayment discharge. This revolves around fraud. Normally fraud in the inducement. Some school had induced you to go to their school based on some sort of misleading fact. This program has existed for years, but has never worked. And that is what we have changed. So when people were submitting the borrower defense application, and it's an expansive application. If you've ever taken a look at it, I think it's 10 or 12 pages. It's really specific. It requires an oddly specific amount of proof regarding the fraud, and historically had been very difficult. There was a period of time, mostly from 2016 to 2020, where they were not even being processed. They literally sat on Betsy DeVos's desk, and I wish I was making this up, but like, she got the applications, and I say her, and of course I mean some clerk, but she literally told her clerks not to process them. They would file them. She did not want them discharged, so she literally put them on a desk somewhere, and literally, like, they sat there on that desk for years. It wasn't until the Department of Education was sued saying, you have to do something with these. You can't just let them sit there. You have to at least deny them. You could deny them if you want, but do something with them. So she said, okay, you want them denied? She takes her rubber stamp and starts going denied, 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 denied. She denied every single one in a day. This is not an exaggeration. This is what she did. So she got sued again. So that lawsuit ultimately culminates in something pretty decent for us. The district court tells us that obviously we can't do that. You have to roll in these applications, and they end up settling with the Department of Education, which I'll go over with you in a little bit. What we have done since that point, so obviously we know DeVos is no longer there. Cardona is now in charge of the Department of Education. He says, well, we're not going to play this way. We're going to do this the right way. He starts processing these more fairly. People are getting a fair shake. We're starting to see some of these discharges work their way through. People are actually getting these discharges. What I normally tell my clients is that this is kind of a storytelling exercise. I will help my clients fill out these applications if they want, but it's not legal. This is like a very factual thing. Like, in order for me to fill out this application for you, you still have to write down the story for me so that I can take the story and put it in the application. I don't know your story. I don't know who told you at the admissions office that you were going to get a job. I don't know what job they told you you were going to get or how much you were going to get paid. I don't know any of those things. Those are all the facts that need to go into these applications. So for the most part, I'll meet with clients, I'll go over this, I'll explain this process, but then they go on and they fill these applications out on their own. If you're curious what it looks like, it's on the Department of Ed's website or on studentaid.gov, but it's pretty lengthy, but it's not complicated. We have some proposed rulemaking here, so that this never happens again. This is going to allow us, so you see group claims. Group claims are things like when a school defrauded a whole group of people, why does every single student have to go through this process? We want to say the school defrauded everyone, and then everyone's going to get their discharge. Which we'll find out as I go over this in a little bit, that happened with a lot of different schools. So in the future, we're going to try to allow that. Expand the type of misconduct that would lead to this forgiveness, and eliminating overly strict limits on when you can file a claim, and ensuring that you receive timely decisions, so no more sitting on the desk. The point of this entire program, the borrower defense, was to curb predatory behavior, right? We don't want colleges being able to go out and openly lie to students, get their federal dollars for funding, and then go on and live happy lives. We want those colleges to be accountable and responsible for what they're telling these students. So the department proposes a recoupment of these costs now. And if they are forgiving these loans due to a fraud, they're going to try to get that money back from these schools. Makes sense. They're also making changes in terms of how these are going to be handled. These schools traditionally, like you'll see with certain credit cards or things of that nature, they're slipping in these arbitration clauses. These proposed regulations are going to prohibit arbitration clauses and class action waivers, so that we can make sure that if there's an issue with the school, that we're going to be able to take it to district court. So that ideally that will be changed shortly. And there's going to be additional transparency into these proceedings, so we can investigate wrongdoing. Now, before I go forward, because I'm going to talk about this total and permanent disability discharge, I think Lori distributed an additional document regarding the Sweet versus Cardona settlement, because I didn't put it in the materials. It does cover a lot of people, but it's a very specific set of people. But there was this lawsuit. I told you about Betsy DeVos. Betsy DeVos gets sued by Sweet. It was Sweet v. DeVos. DeVos ultimately leaves. Cardona gets substituted in. So now we have Sweet versus Cardona. It's about these borrower defense claims. There is a proposed settlement, which actually is being heard next week. I anticipate it going through, but we don't know at this point. But if that settlement goes through, there is going to be automatic forgiveness for a number of people. I gave you a flow chart. If you had already filed your claim, and I think the date on that was June 22nd, if you filed your claim before June 22nd of this year, or your claim was denied already before June 22nd, and you went to any one of the enumerated schools, there will be automatic forgiveness forthcoming. It's a big list, so we're not going to read it, but I did provide it for you. It's mostly for-profit career schools, for whatever that's worth. There are others on there. You will probably recognize some of the names if you look at that list, but under this settlement, we're doing a large scale forgiveness on these applications. If you did not go to one of those schools or did not submit your application prior to that date, the settlement is still going to help you, but there's no automatic forgiveness. So if you're not entitled to automatic forgiveness, what we've done is we've set up a hard deadline for the Department of Education to rule on these applications, which is the second page of what I provided you. You can see the Department of Education has agreed to make decisions within a certain time frame for each of these applications, if there's not automatic forgiveness. that was, I guess, some silver lining on DeVos sitting on these applications is that we get these hard and fast rules now, but that's where we are. Total and permanent disability. So this is another program. It did exist, already existed. People were getting total and permanent disability discharge. What it required was either a veteran with a service-connected disability, someone who was awarded SSDI or SSI with a 5 or more year review period. If you did not have a 5-year review period, and I don't know why it doesn't say this, you would need a physician certification. So, so the reality, so you can still get it, but you need a physician certification. So any one of those things will qualify you for this total permanent disability discharge. So the Department of Education says we're going to streamline this process because, and in fact, I want you to think about this, because of course this makes sense to us, but not necessarily to these different arms of the government. Well, how many different agencies do we have on this list, or invoked by this list? We have the Department of Education, who knows about your loans. We have the Veterans Administration, who knows if you are a service-connected disability. And we have the Social Security Administration, which knows whether or not you're disabled. And yet none of them talk to each other. They just literally didn't talk to each other. You had to apply, you had to prove that you were on disability or that with the Veterans Administration or with Social Security and go through this whole process. So Biden comes in again and says, hold on a second, guys, we got to fix this. Social Security now automatically going to tell Department of Education if you qualify, wiping out $5.8 billion over the next couple months automatically between Social Security and the Veterans Administration. So that's huge. Other thing that we did early in the pandemic, and it's still hanging around, is that Biden suspended the review period. So there used to be a period of time you got your discharge, and then you had to submit income statements for the next 3 years to prove you didn't go back to work. That is suspended. We have no indication of whether or not that's coming back. We're still using the word suspended, so it doesn't look like it's stopped permanently, but as of right now, they're not asking for income over that 3-year period. The department is pursuing the elimination permanently, but it looks like that's going to have to go through the rulemaking process. I guess the thought process here is that if Social Security already determined that you're disabled, why are we looking into this? Theoretically, Social Security is doing a review on you. Social Security knows your earnings. Social Security already talks to the IRS, and the IRS talks to Social Security. If the IRS sees that you're working and they tell Social Security and you're exceeding your income, Social Security stops your benefits. These processes are already in place. So I suppose the Department of Education says we don't need to worry about that anymore. So under the new regulation, automatically administrative data will be matched. So we'll know when you're filling out the application if you're going to receive relief. And the Department of Veteran Affairs hasn't been able to do this yet, but we're going to be working on that. I guess some of these people have already been matched. We're still working on that. It's going to be more, but ultimately all of that should be corrected. I'm a little ahead of schedule. I really thought that that was going to take me longer to get through, but since this is such a robust topic, I'm assuming that there are going to be questions. So I am happy to field those now. I'll also note, I guess, that in the little thing, advertising this course, I said I was going to talk about adversary proceedings, and I did not talk about them. That is because at the time that I wrote the blurb about the program here, I was told by the Department of Education that they're revising their rules on adversary proceedings and bankruptcy, but that has not been done yet. So the status on that is as follows. I have a few that are pending. And I agreed in every one of those pending cases to stay the proceedings. So the Department of Education specifically asked me if I can wait until they fix these rules. And I agreed because it's very hard to discharge a federal loan in bankruptcy, and it can only get easier. I thought there's no way the rules make it harder. So it can only help my client if I wait for the new rule. So currently, of all of my pending federal loan adversary proceedings, I am in a holding pattern waiting for these new rules. I wish I had more information for you on those, but I do not. All I can tell you is that they are working on those. With that, I do have time for questions if anybody wants to talk about it, anything student loan related or any of the new Biden changes. And I'm happy to, if you want to raise your hand here, we can do one at a time, or alternatively, I think, do we have chat function? Yep, you can drop it in chat too. I have the chat.
I have a question, Patrick.
Yes.
Do you know or have you heard anything outside of the IDR program? Let's say a student who's been paying their loans as scheduled, on time, full amount, no special program, and there's just a set amount of forgiveness that's supposed to be coming, that 10,000 they talked about or something like that.
No news on that. There's been basically 3 different proposals that have been tossed around. There was a $10,000 forgiveness for everyone. There was $50,000 forgiveness, which was going to be means tested in some way. It was going to be for, and I'm going to use the word lower income, and I don't mean that in the traditional sense, because I think the cutoff was like 150,000, which I don't think most people would consider lower income, but they didn't want the ultra wealthy getting the benefit of this for no reason. So that if we were going to do more than the 10,000, there was going to be some sort of means testing component. And then there was a discussion about complete and total forgiveness. As far as I can tell, complete and total forgiveness is off the table unless Congress does something. So that's not going to be done by administrative action. The other 2 are being debated within the Biden administration, and I believe that he has sought clarification from justice as to whether or not he's able to do it. From a political standpoint, we're not sure that anything's going to happen. If it does, we're expecting the $10,000. But that's all speculation.
How would that work for students who are still in school, who aren't in a repayment program yet?
We don't know. Yeah, it's all speculative. So we have no idea how he would treat any of it, if at all.
And do you know anything more specifically about students who attended, let's say, like you mentioned a for-profit career-driven program, like an ITT Tech or something like that, which closed down during many of the students' matriculation? Do you know any more particulars about being released through I forget what's the name of the program, but basically the program that talks about where the school closed?
Yeah.
No,
Yeah,
the other one for school closure.
The closed school discharge is very, very limited. If you meet the requirements of the closed school discharge, you can apply for it, but most people don't. Most people that went to ITT Tech have gotten forgiveness from the borrower defense. So I suppose, and I think they may even be on my sweet list, which I haven't. Yeah, they are.
Yeah, they are
They're
on some of the internet lists. I don't think I saw your list. I happen to have a client who's in the situation with ITT Tech. They closed just before he graduated. We submitted an application under the closed school discharge, and I don't know whether it was ignored or what, but we didn't receive anything back. Or maybe it got in the borrower defense pile.
Well, yeah, had you submitted borrower defense, you would have been under the sweet settlement because the ITT Tech is included. So my suggestion, I suppose, would be file a borrower defense application immediately because sweet may be expanded, the dates may move. So I would say file a borrower defense immediately, because you may find yourself under the sweet settlement very shortly.
Okay, good to know. Thank you.
Any other questions I can field here?
Is there a list somewhere about who qualifies for, you mentioned a couple different CDs, the government, profits. I have pastor.
So religion, I mean, the answer is yes. So on the Department of Education, qualifying employers for public service loan forgiveness are clearly delineated. Government employers, yes. 501c3 corporations, yes. Other not-for-profits, tougher, but there is a list. Generally, you're providing community-based services. With limited exception, you qualify. Religion has changed recently. So the rule on pastors, I think, has been amended within the last couple months to include them now. But that's on the Department of Education's website. For years, they were not counting it religion, but they do now.
I mean, I'll just send them to you, because that's not what I have them for, but if I could tell him there's relief,
They're
that would be amazing.
10 years of employment,
It's impacting everything.
always does.
Yeah.
That's why we're having this CLE. I mean, I see a nice mix of people, some family lawyers, some bankruptcy lawyers. I mean, this stuff, yeah, lawyers who need their credits. But
Oh, my God.
Law schools, at 900 a semester.
Whoa. That didn't even cover books.
US dollars?
yeah,
Yeah.
So-
Less than $2,000 for law school.
with college and graduate school being more expensive than that now, these programs are pretty important. I mean, for those of you who have had master's hearings with me in divorce, I mean, the student loan thing has been coming up for years. This is nothing new, but I try to resolve the student loans to the best of my ability, either by using neat IDR tricks or things of that nature whenever we have that come up. So that's part of the reason I wanted to address.
And do
The
they
bar
look
on
at
some of these.
household income, or are they looking, like my pastor's remarried and his wife makes good money, but he's.
Yeah, that's a good question. All right, I love that question. Thank you for asking it. So the question was, when you do your income certification, do they look at household income or is it individual income? And that answer, I have to give you the best lawyer answer, right? It depends. And there are ways to do it the way you want to do it. The trick, if you file a joint return, they are supposed to use your joint tax return. And I say supposed to, because here's an interesting tidbit. If you sign a joint return, that doesn't mean you authorize your spouse to give it to anyone. You have to separately authorize your spouse to give it to people, including the Department of Education. So in theory, I could file a joint return with my spouse and she can say, hey, I need the tax returns for my income-driven repayment. And I can say, I don't want you giving my income to the Department of Education, in which case she's not allowed to give it to them. And then you can do it solely based on pay stubs rather than using your tax returns.
Just yours instead of spouses.
Just yours, because I can't get my spouse's information, won't give it to me. So that is one way we do it. The other way is if you just file a separate tax return, it actually makes things nice, clean, and easy, but people don't always come to me having filed separate returns. Going forward, it's easier to do separate returns. But if I have a joint return before me, there are ways around that. So the short answer is it depends. And it depends on what's better, because if your spouse isn't making much money, you want to do it with your spouse because they do consider household size. They do consider household size, so that it could depend. I typically, when I work with my clients on income driven stuff, I run the numbers and I try to figure out which payment plan is the best, how should we file the returns? And I do that whole analysis with them to try to figure out what payments they should be paying. But it's a good question, but you can do it in a way where it's only your income. People also don't realize, because you're supposed to do a yearly certification to count for these programs, but you can also ask them to do an immediate recalc. So if, for example, I go to file my 2021 tax return, I file it today and I look at it and I say, oh boy, I made a lot of money last year, but I'm not making as much this year. Why would I want them using my 2021 income? That's not really fair. You can ask them to do an immediate recalculation based on your current circumstances, and people didn't realize that you could do that. You could do that at any point. If your income changes, it's actually really favorable to the borrower, because you can always ask Department of Education to adjust you downward, but they can never come to you mid-year and ask you to go up.
Another question.
Yes.
When you say borrower,
Yes.
does it have to be for their education? Because I have parents who are borrowing for their kids, so the debt is in their name, but it's not their,
It's a plus loan, parent plus loan.
whatever it is. That's my pastor. In the divorce, they divided
Yeah.
all the student loan debt. And some of it was their own and some of it was the children's.